read-only mode.
Sorry, I'm late. John, Raymond, Chad, Phil, Desi, Fred, William, Lalit, Raymond. Okay, perfect. Right, let me invite Discord team. All right, let's see Discord, guys. The screen will look better. All right, let's look at this. Okay, this is good. All right, let's start. Welcome to Yellow Tunnel and Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. Today, we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. You can always pause the screen if you need more time to read the disclosures. I will go through specific trading example. If you're new to trading options, please visit optionsclearing.com to understand the risks associated with trading options. All right, very important to have a pre-market routine. I propose to have 30% of your portfolio in cash and look at the portfolio drawdown. Portfolio drawdown, number of positions times the maximum exposure per position, stop loss. I propose not to risk more than 2.5% of your account value per position. How do you determine 2.5%? I would go to Stock Forecast Toolbox or on Yellow Tunnel. We have inside of the services. It gives you for each stock what the range the stock should be trading. For now, 408 and 414, a little bit narrower than yesterday and still negative trend. So the path of least resistance is to the downside. It's very important for bulls to break above 416, 417 level. So let's look at spiders. Pre-market, we are basically flat on spiders. So 417 is the gap, right? So as long as we are below this gap, right? This is gap after the CPI print. This is gap after the pullback. I would say that's the line in the sand. As long as we're trading below 417, the passive list resistance is to the downside, right? The bears are in control. On the support, it's 408, right? This is before the CPI print in August. This is the July data. Market was trading in the range. Market was trading in the range. So it's trading. It's continued to trade in now. It's back into this in this range, and the model identifies this. So the next announcement is tomorrow. We have GDP number, and then a Jackson Hole meeting on Friday. I am going to make an assumption that we will break out of this range. I mean, two scenarios are possible. It's hard to predict exactly. You know, if it's a little bit less hawkish statement from the Fed, I think we can potentially revisit this level or come close, right? That's scenario number one. Scenario number two, if it's just as hawkish as before, right? If if it's still 75 basis points raised in September and 50 basis in October, then market will resume its pullback, right? Scenario number two. If he's going to say, we're only going to do 50 basis points in September and maybe 25 basis points in October, and then we pause, then we will revisit the highs. So those are the two scenarios going into the Fed announcement. So let's say you're bullish, right? Let's say scenario one. Let's say you think that inflation is peaking and the CPI data was less than expected, and Fed will change its tone. It will change its tone, and you think it's one, right? And you're buying at 412. Well, how do you determine your stop loss? Well, one way is 408, right? I mean, it's a very strong 408. You might say, you know what, I'm going to risk 4 points to the downside because I think we can revisit the highs and set up a trade where 20 points to the upside, right? I mean, that's one way to do it, right? This is a pretty strong support because it goes back all the way to August, right? Beginning of the August. So you know that this support is very important. If this level doesn't hold, the next level of support is probably around 388, if I have to guess. Right? I mean, there might be some 400, right? Psychological level and at the top, but very quickly it's dropped. So those are the three supports. I would say this is support number one, this is support number two, right? And this is support number three. Right. This goes back to also beginning of the August. This goes back to now middle of July, right? Overhead resistance, the breakout. So if you decided support one because you're thinking about days, right? Few days, and you're only willing to risk 4 points, then the size should always be the same, right? You're risking $250. Right? You're not risking more than $250. So $250, if you're risking 4 points, then you can buy 30 shares. So here you're buying 30 shares, right? Because you're basically saying, you know what, this is beginning of the August. I think all the negative news are factored in. All right, so it's 30 points. Why $250? Again, 2.5% from $10,000. If you decided stop loss to 400, right, that would be 10 points. That would be 10 points. If you chose stop level 2, then you have to reduce your size. Instead of buying 30 shares, you buying 25 shares. 34 is, I'm still 25 divided by 4, probably 60 shares, right? My math is a little bit off. Sorry about that. All right, so 60 shares. So if you're risking 4 points, it's 60 shares. If you're risking 10 points, it's 25 shares. And if you're risking, what would I say, 390, that's 30 points, no, 20 points. And you're risking 20 points, then you can buy 12 shares. Right? So 60, 25, and 12. The biggest mistake we all make, you basically say, well, August low will hold. You know, we have GDP number tomorrow of the Fed meeting tomorrow, and they're just as hawkish. And then all of a sudden we quickly drop to 400, and you basically say, well, fine, but I think 400 will hold. But all of a sudden, if you have 60 shares and market drop by 10 points, you're down 600 points, and you break in your rule, right? So the idea is you want to concentrate on the process versus outcome. Right? And the process is finding the stop levels and sticking to your rules, right? So I propose that your number one rule, the most important thing that you can do in trading is not to lose more than this fixed amount. So it's a repetitive process, right? It's a system. You repeat the trades. We do earnings trades. We do spread trades. You know, iron condor, cover calls, whatever this trade, whatever system you like to do, you always risk the same amount. And some trades will go in your favor, some trades will not. Hopefully the system gives you more winners than the losing trade. And then the portfolio grow. The mistake usually happens, you have 3 winning trades, and then 1 losing trade, you make this mistake where you pushing your stop loss lower, and something happens in the market, trade goes against you, and all of a sudden in one trade you lost more than 3 successful trades, or whatever your system percentage of winning trades is. So if I would pick one rule, I would basically say on $10,000, never lose more than $250, no matter what, right? One way to do it is always give yourself a little bit more room. You know, if you think that 408 level will hold because it's beginning of the August, just give yourself a little bit more room. Just say, okay, I'm going to give myself a little bit more room. It might overshoot, so I'm going to go to a 400. All it means is that instead of 60 shares, you buy 25 shares. If you're trading options, right, one contract is 100 shares and $10,000, you probably cannot, you know, sell naked put, right? I would do a credit put spread. And same thing, always risks $250. You see that your spread is down $250, you're out of the trade. Let me know if you have any questions. Again, just keep in mind stock forecast. So the question was on stock forecast toolbox, right? So the JP Morgan, you know, the stock forecast toolbox showed positive, right? And then it showed negative, and it still shows positive, right? So it adjusts, right? It adjusts. Market is built pretty volatile, right? Market model cannot predict these sudden moves to the downside, right? When they occur, they occurred 3 days ago, they could have occurred 8 days ago, or they still couldn't have occurred. So here it shows you positive trend. It shows you positive trend because it's been in positive trend. So there is no surprise that it's going to show you positive trend. To show you the drop, it has to have data points. So it will take 1 or 2 days to adjust to the model. Sometimes it adjusts ahead of time. Sometimes it's not. I think it's actually doing a good job. That's why I'm a big proponent of both qualitative and quantitative analysis. You can't just rely on stock forecast toolbox to make all your trading decisions. You have to look at the context, right? We saw 200-day moving average. I said, you know, most likely we're not going to break 200-day moving average or this downtrend. So it was down, right? And I would be in the live trading room. I think we clearly talked about that JP Morgan is overbought. Can it continue to go higher? Yes, it could. This is just purely, you know, market decided that 200-day moving average and S&P is enough, right? But it could have broke through it and trade higher, right? There's still a lot of, you know, even professional traders on all the channels basically saying we're going to break the 100-day moving average, right? We're not going to revisit 460, but it's reasonable to assume we're going to rally 5-6% to 440. So half of the people still think we're going to rally after the Fed meeting, right? So you don't know, right? You don't know. You can't just say, well, stock forecast toolbox showed me the uptrend, it dropped 5%, so it's wrong. Stock forecast toolbox is your compass. It tells you where to go. It tells you support and resistance levels. But if there's a Fed decision or market makes a sudden turn, you have to make those decisions. So I encourage you to participate in live trading room, ask questions, and together we can determine, what the next move in the market is. All right. Thank you, Desdi, for your question. Yeah, Twitter is dropping, but present. All right, so Kevin, yes, I agree. Today, Block Zero, welcome. Let me know if the resolution is better. So just type in the chat if the resolution has been fixed. It looks like I rebooted my computer, installed the iPad update, so I think for the most part, we should have a good resolution. Block Zero, let me know. All right. Bob, good. On Discord, Block Zero on Discord. GoToWebinar has always been good. It's just Discord is sensitive to the resources. All right, let's review the positions and see if we want to make any adjustments. So again, continue to trade around the earnings. Still have JD position and Toll Brothers, right? And this is a perfect example where worse than expected earnings, and but because it's such an oversold stock, it's actually up 1.5%. So I did sell a put, right? I didn't do put spread. Well, I didn't do a put spread because it's a $46 stock. So my thought process, even if it moves by 3-4% below my estimated move, I'm still going to be within $250. So Toll Brothers, I can close it. I'm gonna so let's go with that trade. Toll Brothers last 7 days. So you can find these trades either on Elite Circle or Earnings Power Trader. Toll Brothers wasn't there, but but all the earnings trades. And so this is a good example. So first of all, I sold the put, right? Broke one of my rules: never go naked puts. Always do credit put spread. But if it's a $40 stock, right? I'm selling 40 put, right? So I'm estimated that Toll Brothers is going to move about 15%, right, from where it's closed, and that would be 52-week low. So one issue is that it's not a very liquid name, right? It trades in nickels, right? Not in pennies. So if I have to buy, I sold for 20 cents. If I buy option to hedge for 5 cents, first of all, it would be way out, probably 36 put. And second of all, I would not get 0.5%. So then I look at the worst case scenario, right? Let's say it drops to 36, right? Or 38. It's still within this $250. Well, 37, right? And Toll Brothers probably will not drop 25%, right? It has to be very dismal earnings for large company that has positive cash flow, that's well covered, to drop 25%, right? If I'm trading Zoom or DocuSign, yes, it's possible, right? High beta stock, negative cash flow, has issues with financing its debt, it can move 50%. Toll Brothers, Microsoft, IBM probably will not move, 10% beyond its estimated move. Very rarely, unless it's Netflix, right? Netflix, you can say, but it moved 30%. So certain circumstances when the market is selling off, and when you have a theme like COVID, even a mega cap technology company like Netflix can move, 10% beyond. So never say never, right? It can happen, but it's a rare occasion, rare occurrences, and you have to be careful selecting stocks that are liquid and don't have these themes, right? Like COVID theme, right? Netflix, triple in price because of the COVID, so now it kind of lost all of its gains, because everybody's going back from work. So, but this is an example where you can sell credit put spread. And again, the idea of a 0.5%. 20 cents might not look like a lot of, what's, one contract, $20. It's not a big deal. But if you look at the percentages, and I encourage you to always think about percentages, right? So 20 cents out of $40 stock, that's 0.5%. Right, 0.5%. So if you can, whatever the trades you do, right? If you hold them for 1 day, you hold them for a couple of days. But the idea is that you have a system, right? You look at, this is a system where, literally 9 out of 10 trades are successful. 8 out of 10 trades are successful. So if you can make 0.5% on, let's say, even 3 out of 4 trades or 4 out of 5 trades, right? If you do 3 trades and you make 0.5%, then you're making 1.5%. Right? You can do them once a day, you can do them once a week, but that's the thought process. Then you can do, and then one trade, let's say, goes against you, right? You lost 0.5%. So then every 4 trades, you can make 1%, right? If in 1 week you can make 1%, which is also might not seem like a lot, but then you extrapolate into 1 month, that's 4%. And then you extrapolate into 1 year, it's 48%, right? So that's the system. So that's important to make sure that the losing trades, you're limiting, to 0.5%. Sometimes it's 1%. And, the winning trades are, you always keep the same size, you always keep to the stop loss, and it just becomes a repetitive process, right? The law of large numbers. As long as you do this over and over again, right? You can do it with indexes, right? You can look for 0.5%, 1% selling credit put spread, credit call spread on indexes. Probably the most favorite strategy right now that everybody's utilizing. You can use weekly options, you can do monthly options, but same process. You do trades, you look at certain range, you collect certain premium that's reasonable, and then you look at and you extrapolate to what your returns will be. And then if you're comfortable with the system, then you just repeat it over and over again. But the trick is to know what winning percentages of your system are, and look and making sure that you keep your stop losses limited to this $250. So very important. Good trade in Toll Brothers. Thank you. All right, we have more people on the Discord. FTLT, how's the resolution? Is the resolution on Discord? Is that better? Just type in inside of the stream chat, or FTLT better. Okay, resolution is better. All right. I am excited. Thank you, FTLT. Can you see the chart? If I show the chart, let's see, how's this thing? 175. So Toll Brothers is up. All right, the next trade was JD, right? I'm still in JD. Same thing. Same approach, right? I sold a call spread. I sold the put spread. In this case, I actually did call spread and put spread. Iron counter collected 11 plus 12 minus the hedges, but 11 plus 12, 23. 23 and the $50 stock, that's, again, 0.5%. You can collect more, right? You can collect maybe 18 cents, but then you have to trade puts and calls that are closer. So your your return on capital will increase, right? But your risk will, your probability of success will decrease. So this is just becomes, and how well you can defend these stocks, by doing cover calls. So you can collect more premium, you can alter the system, collect more premium, but then you will have to defend these stocks more often than not. So that's Toll Brothers and JD. Let's see, has it? Triggered. Black Zero, Twilio, Kingmaker, welcome. Let me know if you guys can have any questions. Please type your question inside of Discord, either on stream chat or on this live stream chat. All right. Perfect. Okay, so let's figure out JD. Yeah, one question is, why you spend 5 cents or 2 cents? Well, one is to free up buying power. All the earnings trades, they consume a lot of buying power, right? You're looking for 0.5%, but 47.5 put and 42.5 put, that's $500 worth of risk. So your broker dealer will hold $500, and you can use this $500 for the next trade. That's one reason to free up buying power. The other reason is you just don't know what will happen Thursday and Friday. I mean, you can look at the estimated movement probability. I have, let's see, it continues to go up 3%, 59. I have, let's look at JD. I have 66 call, right? 66 call. So you can look, in one day it moved $2, right? In the next 2 days, it can move $4. You can get close to 66, right? It can come close to 66 and vice versa. So for that reason, you want to close this trade, the sooner the better. Okay, Fred Raymond, thank you. Carmen, question was, do I always look up and down trend on a spider's chart? Yeah, I always look. I mean, these downtrends, I'm not the only one who's looking at this downtrend. Everybody, you can see everybody is doing, because we literally touched 200-day moving average to a penny. What does it tell you? Most likely it tells you that we are trading in a low volume environment driven by a lot of the black box trading, right? These black box trading are programmed to look at these trend lines and drive market to a certain degree. I think the reason we reached 200-day moving average, most likely due to these proprietary hedge funds and black box trading that drives the market to a certain point and then right away drop. Because in reality, nothing really has changed in the past 2 weeks, right? I mean, CPI print, this is not hedge funds, right? They cannot predict CPI data just as much as we cannot. So this is everybody trading. But the reason it stopped to the penny at 200-day moving average, it only to some kind of a systematic trading that has a lot of large volume. They're not risking $250; they're risking millions or billions of dollars, right? So it touched and then pulled back, right? So it's important to look at these trend lines and do this, traditional technical analysis, right? To see how far some of these rallies can go, because nobody anticipated in 2 days to drop 5%, when in reality nothing really has changed. After the CPI print, there's really no new data. There's really no new percent. All it is just fear of that Fed is gonna be hawkish. Well, that fear was, when we were at 390, right? That fear didn't change. So this is mostly just technical trading, looking at this specific, but candidates for where the market is going to pull back. I thought we're not going to break through 50% retracement actually. So I'm off by at least 5%, right? I thought it was 418, but it was 432. So 14 points, 3-4%. I'm off by 3-4%. So that's just how trading is. But in retrospect, it's okay. I don't need to be bullish at 417 because I know the risk versus reward is changing, right? Little room to the upside, a lot of room to the downside, right? So we have to be. So even when the market drops to 390, 380, this is where you want to start buying aggressively, because then you have little room to the downside and a lot of room to the upside. Here, you want to be short the market, right? Because there's a lot of room to the downside, little room to the upside. John, thank you. Peloton pop on their Amazon deal. All right, Peloton is finally moving higher. We'll see how long that lasts. That's nice. Thank you for sharing, Kevin. Guy, Discord is, this is on Monday and Wednesday, mostly Yellow Tunnel community, right? We have two communities, Yellow Tunnel and Discord, right? So you can join us on Discord and kind of see the same broadcast. And same thing on YouTube. So right now we're on Discord. We're streaming live on YouTube. You can participate in Closing Bell today, actually. If you click on subscribe button, you will be able to participate. Let's see, because more people sign up since last time. Yay, 3 more people. So, this is where we have built a community of traders, where we have some people are professional traders, some people just start trading, share ideas, we're supporting each other, we're not judging. There are no bad questions. We're sharing our experiences, right? We all have different experiences. We all have different trading system. We all have different goals, but the process is the same. You have to be process oriented, right? To trade. The process is the same. Doesn't matter what system you're using. It's the same. Decide on position size. Look at how many system with certain percentage of winning trades, and then managing your stop loss. That's what trading is all about, right? Rinse and repeat, right? If you don't have the system or you don't have the process, you can be successful for a couple of days, couple of weeks, couple of years. But at some point, if you don't have a process or a system, you will lose, right? The market will catch up to you. So join us on these, so you can do it on Discord, you can do it on YouTube, and obviously you can do it on GoToWebinar. Thank you, Guy, for the question. All right, so let's review other positions and see if we want to make any adjustments. Still have a Cisco put, probably not going to go anywhere. This is a leftover from the iron condor. It continues to drop. But market for now, you can see nobody's taking any large position. Everybody's waiting for Powell's speech, right? Looks like worse than expected service PMI didn't make any differences. Durable goods doesn't make any difference. It's all about, well, maybe GDP, right? I guess estimated 3 quarters in a row we're going to have a negative GDP. But even that, I don't think is going to be a surprise. I think everybody's waiting for PCE data, right? The inflationary data. That's going to spark volatility, and then follow up by Powell's speech. So I assume Friday is going to be very volatile. So you have to be kind of prepared for Friday, right? So this is the opportunity to adjust your position, right? I propose that we're trading in this range. Right, and you have to basically decide, are we going to have 1 or are we going to have 2, right? Right, we can drop, by Friday 3-4%, or we can rally by Friday 3-4%. So you just have to decide 1 or 2. My portfolio is overall bearish, so I'm bearish, but I still have, I sold, put, QQQ put. I still have some bullish position, so I do have spreads. So the idea, if it does rally to 2, okay, fine, my portfolio will be down, but I have short puts where I can close them, right? So my point is that you don't want to be overly bearish, you don't want to be overly bullish, because both scenarios can happen. Nobody knows exactly what's going to happen. Overall, my portfolio is bearish. My portfolio will grow if the market is down. It will, I will be down, but, I'm basically at this point, I think this is confirmed. So the closer we get to 430, the more aggressive I can be on my short puts, right? And this is the reason why I still have, when you trade spreads, right? When you trade spreads, you can always have these short puts, right? To 80 short put, and I have another one somewhere, and 280 put, right? So these short puts, if the market does rally, then I can close them, right? If it continues to go down, then it's a debit, it's a calendar spreads. So my long puts will continue to go higher. So that's the QQQ trade. FCX. This is again idea of calendar spreads where I'm long, I'm bearish into November, 25-30 put spread. That's the bearish put spread, but I still have 35 call. Because, it could continue to rally. So the idea of having long and short position, then you look at overall your portfolio delta, right? You can be positive, where you're bullish, or you can be negative, right? You have more puts than you have calls. And I would keep an eye on the yield curve, right? Right now, steepening of the yield curve, only 25 basis points inversion. We were as high as 45. So the anticipation, the bond market anticipates that Fed will remain hawkish, right, going into the Friday, and that the interest rates will continue going higher. So we could revisit more than 320. We probably could revisit even 3.4, if I have to guess. But market anticipates higher yield, and you can see dollar continues to rally, and then dollar will also rally, and that could spark actually sharp volatility in the market, right? Because if the dollar breaks through this 20-year high, there is really no overhead resistance, and that's when the sell-off can accelerate, right? We are trading close to multi-decade high. I think during Walker we were at 160 as a dollar. You have to go to 80s. But so if we break through this level, my point is that there's really no, we can, I don't know if we're going to get to 120, but we can quickly get to 115. That will spark volatility in the market and cause that capitulation. I don't think it's going to happen, next few weeks, but eventually it will. I think eventually it will break out of this range. Right, not range. It's not even in range, but it will continue rallying higher, and that's bearish for the market. This price action is bearish for the market. So that's FCX trade. IWM also started its pullback. I have September put spread. I'm trying to get into December put spread. Bearish on Russell 2000. We'll see how the market will trade after Friday. We talked about JD. So put spread got executed while we were talking. And so I'm out of the JD put spread. Now I have to manage the call spread and wait to close the call spread. Morgan Stanley, again, the idea of having long and short position, still long Morgan Stanley, kind of waiting. If the market continues to go lower, okay, I'll have to close the Morgan Stanley, but overall portfolio will grow. If it does rebound, back to 90, 92 level, then I would just close this trade. So that's an example of the stock position. We talked about QQQ. Still bearish, right? I have 280 to 40 long puts, right? So bearish. I have 330, 350 call spread, bearish. I do have 300, 310 call spread to decrease overall delta. 300, 310 call spread. I actually think that by December we will be back, right? We will be above 300 level by December. We'll probably be below, in September, October, but then Christmas rally by December will be above that level. So, and again, if you long and short, ideally, you want to close the short call, right? If the trade goes against you, you want to close the short call when it loses maybe half of its value. By October, if we do have this drop, then this short call will probably be worth $10, $12, and at that point you can close that. They're kind of like what we did with XLF, right? I had 35 put, I had 40 short put, 40 short put expire worthless. Now I have 35 put. Not expire worse. I closed it because it lost more than half of its value. So now I have 35 put with the idea that now I don't have, there's no limit to this, if XLF continues to drop, right? Like we talked about. If banks continue to drop, then, then this position is going to continue to rally. Carmen, thank you. January 23, 275, 327. So the question was about 6 months low, 275, 327. This is again one of the examples where I think we're not going to reach this level. So you can't use the stock forecast toolbox and say, well, on January 23 we'll be at 300 level, right? It might happen, it might not, right? Nobody knows. It basically, you can interpret that the trend is to the downside. That you can definitely use this trend. 411 market was overbought, right? Even though we reached 430 level, and we might reach 353. We'd not reach 353, not in August, right? It's too early. Unless we have some kind of event in the market. So you use this trend to determine this. We are in downtrend, and at 411 market is overbought, and that's why I said don't chase the market when we reached 417. We did reach 430. It did overshot by 5%, but that's a random event, right? It's kind of black box trading. Refers to hedge funds that program their software to buy until certain level is reached and then sell, right? So that's what black box trading refers to. There are no humans, they're just machines, that hedge funds that just buy and sell at certain levels. So that's how I want to interpret this. It's very unlikely to break through this year lows, right? We have this cross asset class rally, more than everybody anticipated. So in 2 months, assuming there's no other black swan event, we're probably not going to revisit the lows on spiders, right? It might get to 380 to 390. But I would still not ignore these predictions. I do agree with the model that at some point we will reach 323 level. Most likely it's going to happen, maybe not in January 23, but I don't know, March 23. I don't think that the low is set, and the model also doesn't think the low is set. And that's the most important information, right? I don't really need to know when we're going to break the lows. If I believe that the lows will be broken, all it means to me that, well, if the lows are going to be broken, we're not going to break the highs. So anytime we get to 330, 430 to 440, I'm going to be bearish. because I don't believe, based on what model is predicting, we're going to make new highs. If you don't believe, if you have a model that tells you, in January we're going to be at 480, then you have to use the reverse logic, right? So my logic model tells me we will break the lows, so that means I can't really get really bullish, when the market is up 20%. I have to get bearish. So that's where the power of this model is. It's not the best timing mechanism, right? Nobody has a good timing mechanism. But as long as you believe that we will reach the low, it doesn't matter if you do it in October of 2022 or if you're going to get it into February of 23. That's irrelevant, right? It guides you what portfolio composition should be, right? And how bullish or bearish you want your portfolio to be. All right, earnings. Let's 9:10. Let's go over the earnings. Let's go over the setup. Let's see NVIDIA. When is NVIDIA? So we talked about NVIDIA announcing earnings. Again, it's an iron condor, right? So it announcing earnings after the close, iron condor. I would wait, right? Market will fluctuate between gains and losses, but let's just look. Same thing. I would collect 0.5% gain and loss. So let's set up the trade. I'll put it away from the market, NVIDIA. Yes, we do have a pullback. So it's a $180 stock, right? It's a $180 stock. I can sell 146 put, which would be basically 52-week low. I'll put it for now away from the market, 40 cents, 50 cents. So I'm trying to sell 146 put. Once I sell it, then I would hedge it, right? If you cannot do it as two separate transactions because of the buying power, then I would just do it as a single spread. Find, a spread put that, you're paying 2-3 cents. And then same thing I would do with the call. So I sold 146 put. That's $24 away from the market. So 192.5. Let's see, 192.5. $192.5. I'll also going to put it away from the market, 50 cents. And I would execute it at the end of the day. Because the problem, if you do it now, so again, I'm collecting, if I do it now, 38 plus 31. So that would be 69 cents. 69 cents on a $170 stock, a little bit less than 0.5%. And with the idea that NVIDIA will not break through the 52-week low, and it will not break through this overhead resistance. The reason I want to wait till the end of the day, because if something does happen in the market and we pull back, I don't want it to be significantly lower. All right, it's 9:15. Any questions on Discord? Block 0, FTLT. How's the stream? Is it better? Block 0, FTLT. No issues with the stream today. You guys can see the chart. All right, thank you. Beck and Wolf just joined. All right. On Discord, let's see. Fred, retail losing steam, JW, I mean, all the sectors are losing steam, right? XRT, right, we talked about which sectors, consumer discretionary, you know, small cap, mid cap, but definitely retail is losing steam on JWM news. So Carmen, yes, black box affects the market, right? Dark pool, you know, black box trading and dark pool, I think, are different topics. But black box usually refer to black box trading where it's machines trading without human intervention. I mean, humans program them, but they don't press the buttons. Kevin, I don't think we're going to crush September, October. I mean, everything is possible, right? There's always war in Russia, Ukraine. There's midterm elections. But just looking at the price action alone, right, this is a very impressive rally. Very impressive rally. I don't think we're already in September, basically. So in 2 months, break through this level, something has to happen in the market, right? Here it was the CPI data. If it's the same statement like from Britain, where Fed will come out and they will say, listen, we think inflation is going to top out at 20%, right? Like in Britain. Well, yes, the market will collapse, but something has to change. You don't know when something is going to change, right? I always assume nothing is going to change. It's kind of a status quo. So assuming there's no outliers and there's no black swan events, September, October will be volatile. It will be trade to the downside, but I would be surprised if we revisit the low and breaks them, right? That would be like a negative surprise to me, right? Because I'm probably going to be bullish around 380, 390. My overall portfolio will get bullish. Because usually, November, December, a lot of people still believe in soft landing. A lot of hedge funds, money managers, they're going to start buying aggressively in November, December, into the rally. So I don't think the market is going to collapse September, October. But that doesn't mean we're not going to break the lows. That just means that most likely it's, January, February is usually very volatile and bearish, right? If the market, sets the tone for the rest of the year. So I think January and February, it's much easier to anticipate this breakdown in January and February than in September, October. September, October, actually model sees that there's no breakdown, right? Gravitated toward 360. So I think that's what's going to happen. All right, Belaf Sharif, thank you. I cannot read Danish, but welcome. All right. Fred, yeah. Carol, the NVIDIA 197 or 180. Well, I sold one. I'm trying to sell 192.5 calls. So the long call has to be above this level, right? It's a credit call spread. So I would rather buy 197.5. For now, I placed it. It's just on hold. I want to wait till end of the day, right? The problem is that if you do it now, and let's say we do rally, then this estimated move, you can get caught on short calls or short puts. So I'd rather not do it now. I'd rather wait till end of day. So if you have earnings power trader, you'll get the SMS message. If you have Elite, you will get SMS message. So just watch the SMS messages, but last half an hour, the trade should be in. Thank you, Carmen. I appreciate your comments. All right. Any questions on Discord? On Yellow Tunnel? On GoToWebinar? On YouTube? So again, few announcements on YouTube. You can participate live today, closing bell. So please click on subscribe button. If you like these live trading rooms or you like any of the content, please share them. If you're part of any trader community, don't trade alone, right? I propose that one thing, I mean, it's a time commitment, but you want to at least watch the recordings. You don't want to trade kind of in isolation. So you can do it on Discord, right? You can do it on YouTube. On GoToWebinar. And also consider donating to gate.org. This is a nonprofit organization. I'm part of it. On the board of directors. Again, I was born in Kiev, Ukraine, still have family there. This is a very sensitive topic for me. So there are millions of families that need support, right? The economy is on the brink of collapse. They're not getting help fast enough. So this is a way to donate directly to the families. It doesn't have to go through any channels. 100% of your donations going directly to families with kids. So if you want to make the difference, please donate to gate.org. All right, that's all I have for today. Thank you very much and have a great day. And watch the Earnings Power Trader and Elite Circle for the messages. I will be in NVIDIA by, probably, half an hour prior to close. Thank you very much and have a great day. Bilal, you can send a message in the support ticket. So you can open up a support ticket and we'll be able to translate it from Danish and respond to you. So I'll put it here, the message. Well, PM Central. Sir Bill, I can't really understand what you're saying, so please open up a support ticket. You can do it on Yellow Tunnel or Tradespoon, just do it here. Just click on chat now and we'll be able to translate it. All right, thank you guys on Discord. See you tomorrow. So tomorrow, 12 p.m. Central on Yellow Tunnel. And the same thing on YouTube channel. We have next event is tomorrow on Yellow Tunnel. You guys welcome to join me at 12 p.m. Central. We'll review NVIDIA trade and talk about trading psychology and how to trade in current market conditions. John, thank you. All right, John. Congratulations, John, to your dad. Recording on SH trade. All the recordings should be here. I review all my trades. I forgot to review SH trade. I don't know why. But all of the recordings on yellow side here, or in specific services, and on Tradespoon event recordings. Every day we have a recording, and I go over all the positions. Thank you, John. Phil, thank you. IWM is close. I'm bearish on IWM, so September I'll probably, it's not going to reach that level, but December it will. So 310, yeah, we're getting close. We're getting close. I mean, if it rallies, if it continues to close the gap, then we'll get filled. All right, guys, thank you and have a great day. Hopefully to see you tomorrow at 12, so on Yellow Tunnel. Scott will do closing bell today, and I will do morning bell and tomorrow. And